Everybody, Jake here with TrendSpider to go over the weekend update into the last 2 weeks of October. We'll start with SPY here, and we can see this broadening formation, kind of flag formation forming on the daily side of things. And the one thing that I want to point out that we're not going to see on the Qs as well as IWM is this gap fill here on SPY that we did experience, and we do have those gaps quite below on QQQ and IWM. We'll go over that here in a second. The second thing I want to point out here is we did have a nice bounce off this October 2nd anchored VWAP from Thursday, and then we had a little bit of a pullback into the end of the day on Friday, shown by the raindrop here. Second thing I want to point out here is possibly this double top forming as a function of the bodies of these previous, let's say, 5 or 6 candles across the board starting in August. And you can see here 1, 2, and now the third time we've kind of either opened or closed right at this red line. So will we double top? We'll have to see. Obviously there's wicks above this line, so that's something to keep in mind as well. But all in all, definitely an interesting week last week. Not a lot of progress, just kind of a lot of chop. Going into the Qs, we have the weekly setup here kind of showing this broadening formation, and what you can see here is essentially this area of kind of middle resistance, so kind of making this the line of best fit, and then making the resistance and support below, kind of this broadening setup. You can see that this previous level of support did act as resistance, and then you can see here on the Qs we do have that gap below, actually 2 gaps below, kind of like what we have on SPY. We still have a gap below, but we did not actually fully fill this gap on the Qs, so keep that in mind going into the week ahead. And remember, if you want to get an alert on the weekend, or if you want to create an alert on the weekend and then get that alert during the week, you can always create an alert at this line. And so whenever the price essentially breaks through this bottom line here, i.e. filling the gap, you'll get an alert. So remember, you can create alerts on these gaps. Whenever the gap forms, you'll get the alert, and or whenever the gap fills, you'll get the alert, and you'll know it's time to get back on the saddle and see what's the next move. Now, as I mentioned on the weekly chart here, we are kind of at this line of best fit resistance, and we'll have to see if that continues to act as a level of interest for sellers into the week ahead. Now, IWM is one that definitely was showing a little bit of strength relative to the weekly resistance line. So if we remove this volume by price here, we'll see that this previous level that acted as resistance or a level of interest for sellers is now acting as a potential level of interest for buyers, or at least it did last week. We'll have to see if that continues going into the week ahead. Now, as I mentioned here, we do have this gap below, and the price is way far from this gap below. Something that we didn't really see on the Qs and SPY, pretty much almost filled them last week, where this one, the gap below is quite a distance, almost $10 below, as well as this gap below here. But the main thing is this price channel that has just acted as a level of interest for sellers for now. So the main thing, or kind of the status quo changing thing here, would be price breaking through this area of interest above for sellers, i.e. this resistance zone above. And that's kind of what everyone will be watching into next week. Now, the next thing I want to go over here is VIX. So if we go to the volatility index, obviously it's very hard to chart the VIX because it's derived from a lot of things that aren't necessarily what I would call chartable. But we can see here that we do have, on the weekly side of things, just kind of, a lot of chop over the last, let's say, 3 months. But this chop kind of forms this inverse head and shoulders on the weekly side of things. And I know a lot of people say you can't chart the VIX, but this is just something to keep in mind. I mean, it is an inverse head and shoulders. There is a gap below, which would be more on the bear thesis on the VIX side. But if you are a bull on VIX, this is something to consider, as well as that possible double top on SPY. So we'll just have to see what happens going into the week ahead. But that is the broad market recap, and let's see what happens into next week. Now, starting with the 10 stocks that we'll be going over, let's start with PayPal. PayPal's an interesting one because if you look at the hollow candle here on PayPal for the daily side of things, we have this big wick. However, if you go to the raindrop, you'll see something else. You'll see in that wick, there's a lot of volume at the top of that range. So you can see here a huge bulge of volume within that wick, and that's something to definitely keep in mind going into the week ahead. Pretty much showing that there was conviction by buyers within this this top range of the daily candle. Now, on the weekly side of things, we have this ascending triangle forming. You can see that we did kind of wick through it, but we didn't actually close through it. And remember, essentially I've started this horizontal resistance from this top peak here, and then we tested it multiple times, couldn't break through, and once again we couldn't actually close through it this week. So definitely something to keep in mind going into the week ahead for PayPal. Going on to Walmart. Walmart is one that definitely had a nice breakout on the weekly side of things last week. So you can see here we did close above it. We actually almost opened above it as well. But then on the daily side of things, you can see here that essentially we are kind of flagging. The one thing that I'd point out is not a lot of volume at the top of the range here, and definitely something to keep in mind going into the week ahead, both on the daily side of things, but also the weekly side of things with this ascending triangle breakout. And I mean, if we continued up, the natural area to act as a potential level of interest above would be, let's say, this 151 area, which was the previous all-time high. So definitely a breakout. However, we have to keep in mind that not the strongest weekly close here. Going into GE, this is one that had a very strong move going into the end of the week, something that we didn't see necessarily across the board. So you'll see here on GE, we have this previous level of resistance with a lot of volume above this. You can see this kind of bulge at the top of the range here, as well as if you look at the weekly side of things, we have this symmetrical triangle forming and a nice breakout going into next week. This has been really kind of forming a base here for quite some time, and we're finally starting to move up. So GE is definitely starting to heat up. One thing that's already heated up and has kind of exploded is NEO. So you can see here on NEO, we did actually break through barely, or we broke through, but we barely closed above this previous level of resistance. You can see here on the daily chart, not a ton of volume at the top of the range on Friday. So definitely something to keep in mind on the bullish side of things, just not a lot of conviction by buyers at the top of the range on Friday. However, we did barely close through that resistance line, so that is something to keep in mind on the weekly side of things. Going into DraftKings, DKNG, you guys can see here, if we do turn on the anchored volume by price, if I could find it, if we anchor the volume by price from this March low, you can see here that kind of interesting, the Alpha Trends anchored VWAP, and let's create it there, not here. The Alpha Trends anchored VWAP is really kind of riding right along this volume shelf here. So you can see it not only on the volume shelf side of things, is the level of interest below, kind of a lot of volume forming here, but the Alpha Trends anchored VWAP is riding right along this area as well. So if we did continue down, this would be an area of interest definitely for buyers below. And then on the daily side of things, we do have this ascending support level that could possibly hold. We don't know if it's going to hold. We don't know if it's going to be support this time around until it proves itself. But this would be an area of interest below from a technical standpoint. As you can see here that we have bounced off this area previously. And notice that I am using two trend lines, not one. So this kind of gives us a zone rather than just one precise area. So that is DKNG. Going into Target. This looks a little bit like Walmart, I gotta admit. So we did break out here, and if you anchor the volume by price from the start of this ascending triangle, if we kind of go over a little case study on the volume shelf here, you can see this volume shelf acted as a very strong level of interest for buyers, and then supply dries up, we get our big move up. Now, what's interesting here is we've kind of already had our continuation here on the ascending triangle breakout, where we actually have not had that yet on Walmart. So is Walmart the next one to kind of move up? We'll have to see, but last week we did close right at this 1.618 resistance area or level of interest. Now we are moving up. If we do continue to move up, this 2.618 level of interest fib would be something people are likely watching going into the coming weeks. Now, one thing that I wanted to point out here on the daily side of things is essentially you can see here we did not have really any conviction by buyers above this previous high. So a lot of the time I like to just put a horizontal level here and see, is there any volume actually above this area shown by the raindrop? In this case, you can essentially see there really is no conviction by the buyers during the first or the second half of the day on Friday. So definitely something to keep in mind for Target, and really not the strongest weekly candle close either. Going into Zoom, Zoom is one that just keeps going, and it kind of blows my mind. But that's my opinion really doesn't matter. It's what the market thinks. So in this case, you can see here on Friday we did have this ascending triangle breakout with a lot of volume at the top of the range and a nice continuation up on Friday. Now on the weekly side of things, you can see here, essentially, if we anchor the volume by price from this low on during the week of August 10th, you'll see there was just a massive volume shelf forming here, and that finally acted as a launch pad last week. And now we're kind of right into this channel resistance zone above. Notice here that this is also a zone, so we could easily continue to move up, but really this interest of by sellers in the past. We'll have to see if that continues going into the week ahead or the next couple weeks ahead, especially COVID cases are popping up again, and this is kind of like your poster child COVID play at this point. So definitely a strong move up last week, and let's see what happens going into the week ahead. Now Twitter is the next one we'll go over, and Twitter is one that did have some trouble breaking through this level of interest above on the daily side of things. So you can see here we did have a test of this area. Notice how we did not actually test perfectly this area above, so that's why I have this zone highlighted in the solid candle in the dash, or solid line in the dash line, versus just having one wick to wick line here. It's really a zone that we want to watch rather than just a precise level. So all in all, we did pull back. We'll have to see what happens, but the main thing that I want to point out here, if we anchor the volume by price from this March low, you'll see that there's this huge volume gap below. So that pretty much means there's just not a ton of liquidity below. So if price did start to break down, that would be something to keep in mind. Now, if we do anchor a VWAP from this pivot here, you'll see that we're pretty much this anchor VWAP will pretty much kind of come right and be in the middle of this volume gap. So remember, the volume gap is used with the anchored VWAP. So you generally want to anchor a VWAP from the swing low or the pivot before this. And you can see here that if we did start to break down, the Alpha Trends anchored VWAP would be a level of interest below into the volume gap. Now, if this breaks down, the next level of interest below would be this next level of volume here, let's say around 40 to 41. So not the strongest candle on the weekly side of things. With the volume gap below, we'll have to see what happens going into the week ahead. Now, FSLY, this is this was a tough one last week. I got to admit, watching that drop like that was just kind of fascinating. Just how quickly it dropped on such minute lowered guidance. There wasn't a lot of lowered guidance there. I mean, it was barely anything. But when supply and demand are ready to make a move, or when they are in the right kind of equilibrium, things like this happen. I mean, sometimes if price is just way overextended, you don't necessarily need to have the worst news to have a move down like this. But the one thing I want to point out here is the confluence between the Alpha Trends anchored VWAP from the March low with this volume shelf here. This volume shelf was initially our launch pad, and now it's acting as a potential landing pad, I guess, if you want to put it that way. But if we did break down, the Alpha Trends anchored VWAP is there as well. Notice though that there have been times where we did break down a little bit through this Alpha Trends anchored VWAP, so we can go ahead and put an offset. So if we put a percentage offset here, maybe 2.5%. I'm not sure what it's going to be, but let's see what that offset will be. Oops, I forgot to make it negative. Man, that's going to be like a 5. So negative 5% offset. Still not. So yeah, I mean, there could be quite a bit of flexibility around this anchored VWAP, honestly. So look here, the reason I did 7.5, I'm trying to essentially get an area where this candle broke through. So I mean, it's almost 9%. So let's go to negative 9% here. And you'll see that 9% band is really starting to essentially capture that very slight breakdown before the massive move up in May. So remember, I mean, if we did break down, there has been times where this has broken down quite a bit through the anchored VWAP before reversing. So whenever you're using anything, you want to make sure that you do have some flexibility on your levels, not just a precise area. So in this case, I did make a 9% offset to the downside through this anchored VWAP, and that's going to be interesting to see if we do test those areas below this this anchored VWAP. And remember, you can put an alert on this lower line, so anytime that the price gets anywhere within this zone, you'll be alerted, and we'll just have to see if that area is tested into the next couple weeks. I do have just a daily chart here showing this anchored VWAP as well, and you can see here essentially that you know, there is flexibility below. And one thing with the trend line side of things, we did kind of break through this area. So not the strongest close for the week on FSLY. I saw a lot of people kind of buying the dip there, and it just kept dipping. So were people too early? We'll just have to see. But all in all, this thing is still up a huge amount since March, which makes it easy for people to sell. If people have a lot of profit margin they're working with, it's very easy for them to sell, and that's how you get these big moves down. So all in all, still at the volume shelf, still above the Alpha Trends anchored VWAP from this March low. We'll just have to see what happens. Last one is CRM. CRM is one that had a really strong move up last week off this volume shelf here. So if we anchor the volume by price from the March low, you'll see this area acted as a nice launch pad for price. And then last week we just didn't have the strength to continue up. We did gap up and then kind of move down the rest of the week. The one thing I want to point out here, though, is from this swing high, the Alpha Trends anchored VWAP has acted as both a level of resistance here or a level of interest for sellers. And then finally, at this point, showing a level of interest for buyers. And you have this blue raindrop here. So blue raindrop is essentially just an equilibrium on both ends. So supply and demand are essentially in agreement. So the left side, the right side, the first half of the day, the second half of the day's VWAP is the same. So pretty much a volume-based doji here. We did have a little bit of a pop on Friday, but you can see a majority of the volume is at the bottom of the range for Friday. So not the strongest day for CRM or really tech in general on Friday, but we'll just have to see what happens into the weeks ahead. Now, one thing that I did forget to do here, let me turn on the hollow candle. So if we go back to VIX, cash tag, and if we go to seasonality here, this is something I want to point out. Since 2000, and we're going to look at election years, since January of 2000, excluding any year that wasn't an election year, so essentially we're doing seasonality on election years, October has always had an increase for VIX. So notice here October has a 100% win rate. So that means any election year, October always closes green on VIX. That's not really shocking just because you have a lot of jitters going into the elections, but definitely something to keep in mind. 100% win rate from historical performance. That does not mean we're guaranteed to have 100% guarantee for October to close green, but the seasonality is very strong for October looking at VIX. Definitely something to keep in mind into the last 2 weeks of the month. So hopefully this video was helpful. Everybody, thank you so much for watching and have a great weekend.